Porinju Veliyath now joins in from Equity Intelligence. Porinju, good morning. Your hypothesis on Twitter was that the market should rally from here on. Are you surprised by the consistent selling that we have seen over the last 3 or 4 days?
Yeah, markets are weak. There's no doubt about it. There are many concerns, economy specific, market specific, and even politically. These things are a part of our day-to-day market life. At the same time, we should look at the big picture. If somebody is an investor, that's most important, and that is what is missing in our markets today. And I'm very bullish on Indian markets. And, people change the mood, just looking at the days, Nifty or Sensex being beaten down, or a couple of stocks falling because of some company-specific news. But equity investing or value investing is much beyond that. Now, media is talking, the Samvad 2071 was a disaster. Nobody made money. I don't believe so. Maybe those who are following the Nifty and Sensex, they might have got bored, or if they buy the broader market. But I'm telling that thousands of Indians, smart investors, value investors, created huge wealth in the last 1 year.
That point is taken, Porinju. Last year was all about individual bottom-up stock picking, and a lot of stocks did well. But at the end of the day, a lot of retail sentiment is driven by what's happening at index level, and which is where the market is clearly hurting.
Yeah, that may continue. See, this Samvad 2072 also, it is not going to be very exciting for those who are looking at the general markets. And see, what I'm telling is something different. What I'm talking is about stock picking. The opportunity, whether there are opportunities in Indian markets for stock picking. We had it a lot the last 2070, 71, and 72 also is going to be a fantastic year from that perspective. I don't know about FI selling or MSCI recasting their indices on emerging markets on India, or Fed will hike the rate in December. If people are looking at those kind of things, they miss the big picture on India, the big opportunity for value investing in this country. So what I am trying to tell investors, leave all those things. Of course, one has to be aware about the macro level things, but you ignore the Nifty, what NSE has made. You make your own Nifty. That makes sense. If wealth creation is your motto, you make your own Nifty and create wealth. And Indian markets, I'm telling you, it's a great opportunity in this coming 1 year.
Okay, well, we have broken the earlier intraday low of our markets for today. So 77.39 is where we had gone to versus 7741, which was the intraday low earlier. Porinju, happy Diwali firstly. I wanted to actually extend the point that you have to look at the larger picture of stocks. Would that apply to, say, pharma stocks? Because we've heard bad news with regards to Dr. Reddy's and Sun Pharma, and these were stocks that were the biggest wealth creators for many years for a lot of investors. Would you then hold on to your positions in those kind of stocks and ride the storm, or maybe lighten your positions there?
I am so lucky I don't have that kind of positions to hold on. I'm a value investor, so a Sun Pharma never came to my radar in the last few months.
Yeah.
Or a Dr. Reddy, or a Page Industries, or an Asia Motor, or or a the Bata, Kaveri Seeds, Kitex. I was hating these stocks in the last 1 year, because there are no values left. They are great companies. See, that's again I am repeating. I have been always talking, look at the stocks, the great stocks, and not the great companies. I'm telling you one more thing. In the last 1 year, the Samvad 2071, what happened? The moat became a trap for all the new investors in this country. A lot of people, thousands of them, they started first time investing in this last 1 year. They listened to the biggies and, the big people fancied guys, and they were all talking about some stocks which have gone up by 5 times, 10 times, and 20 times, and now it has become moat stocks. Because this was the biggest trap, and people are losing 20, 30, 40% by doing that kind of safe investment.
Okay, so Porinju, that point is taken. So, why don't you help our viewers? I believe you have one value investment for us, for our viewers today. Why don't you take us to that?
See, in June, 3, 4, 5 months ago, I talked on CNBC about a company. Lata was there, I was talking to. The company's name is Future Consumer Enterprises, FCEL. Okay, that the stock price was 13 rupees that time. Now the index is down by 7-8%. Today the stock is up by around 45-50%. And this is a stock I'm even looking at for next 1 year investment or next 5 and 10 years investment. Looking at the big picture, this is a Biani Group company, a very clean balance sheet, a growth model, profitable growth model with zero debt on their balance sheet for the next many years. And the company management is projecting something like 20,000 crores of revenue, which I think very much possible and logical. Looking at the style and structure of their business, the model, the business model itself, it's very, very relevant to Indian conditions for the future. Starting from procuring products from the farmers in rural areas, processing it, branding it, cleaning it, and packing it and selling through their own outlets, retail outlets, and through other network. So this is a business where consumers are going to benefit with the lower prices. And this company, I think this is very relevant, and perhaps this company can replace a part of Nestle's, Hindustan Levers of this country. So that way I find that investors should look at and focus on companies which can create wealth in the Indian environment today. The consumers' consulting the consumers' attitude, their affordability, and the network. So I find selective stock picking, that is going to make money for you.
Do you have any price target on future consumer, Porinju?
There's no target. So see, target and all is for traders. It's like, future consumer, now it was 1,800 crores when I recommended it. And now it is 3,000 crores. This can go to 10,000 crores and 20,000 crores for a period of time. So, but you have to watch. There is no ready-made multi-baggers in this market. I'm telling you, a lot of people misunderstand listening to some people when they tell the stories of multi-baggers they made. See, multi-baggers evolve over a period of time. You have to give time, and you have to watch and monitor the business, the industry environment, the country's economic environment, the global competitiveness. So that's how the multi-baggers evolve over a period of time. Then some point of time, people get excited, and the MSA will put they will add those kind of overpriced stocks into their index. Then only people start buying, and that is normally the decline starts for those kind of companies. So people, following the MSCI index, I'm not talking bad about MSCI index, but see, if you see the pattern today, why I noticed today, I think there was an announcement on CNBC. I heard they have changed the structure of the indices on India and other emerging markets, wherein they have added some stocks. If you see the stocks which they added, they have already gone 5-10 baggers in a short period of time. And the stocks what they removed, just gone down by 90-80%. So how can somebody follow that kind of a pattern and make money? And again, people now, Q2 result season is over. People are looking at 1 and 2 quarters of results. I know people were selling Dish TV at 50-40 rupees because of a bad quarter. Now I saw people buying in a big way, buying the same stock for a good quarter at 120. How can people make money like that? People buy, Vedanta at 300 rupees because copper and aluminum prices are high. They sell it at 80 rupees when aluminum prices are low. It's not the way to create wealth. You have to be sober. You have to see the world goes beyond a quarter. Investors have got life beyond a quarter. So that's a kind of big picture value picking and never compromise on valuation.
So you have to have the courage to hold through the bad news also, Porinju. But
it's not courage. It's not courage. It's conviction and knowledge and wisdom. It's not about courage. This is not a something like a circus where you.
Okay. Porinju, anything else apart from future consumer? I know you have given us future consumer, but anything else that looks good to you?
It looks very good to me even at these levels.
Sorry, which one? We lost you there.
Investors need not hurry to buy the stock today. When the market conditions.
Porinju, which stock? Sorry, we missed you. We had a bad Skype connection. Which is the stock you are referring to now?
Future Consumer Enterprises, FCEL.
No. Apart from future consumer, is there anything else that looks good?
See, I'm mostly into smaller cap companies. So when these individual names are dangerous. They goes into circuit and nobody benefits by talking it on the TV. Okay. So I feel let people keep their eyes and ears open. Look for ideas. Where the comfortable valuations. Don't go after too much fancied ideas and the most kind of stocks.
Okay. Your earlier picks included the likes of Arvind Infra, Tata Global, which you've mentioned a couple of times. Any of them that you'd like to revisit?
Tata Global is still very good bet. We are holding stocks, even FCEL and Tata Global. Tata Global is underperforming. I have bought recently. Of course, I'm not underperforming in that regard. But FCEL, we have been buying from 10 rupees in PMS, one of our major core stock in our PMS. We plan to hold it for next 5 to 10 years time. And so investors can get some pockets of weakness, they need not buy this kind of stocks today. Tata Global, again, I'm telling you, at one time the revenue, it looks like a very good pick. The only negative is they are under Tata management.
All right, Porinju, thanks a lot for your time, and we'll talk to you again sooner than later. So that's one value pick from Porinju, future consumer, and of course in the past he's given some stock pick.